revoked, we cannot get it back.
Usually, once your license is revoked, there's almost no way. Depends. Usually, if they say revoke, at least revoke for 1 year. And after 1 year, this person can apply, say, can I, restitute my license, and the board gonna see, have you correct yourself, have you done any, did you take any course to improve, not really improve your skill, okay, improve your attitude, okay, improve your, I don't know. So after 1 year, this guy maybe try to, I don't know. Okay, anyway, let's go back to any other questions, any other any other input? Right.
Are you able to check the record of
Always, yeah. The CPA license is at a state level. You just check every state. The name should be there. If it's like a lawyer, like a architect, like a doctor, medical doctor, before you go to see any doctor, better off check the board if their name is really registered, not revoked. Okay, yeah. So if it's professional license, you can check.
And the record will be there.
Yeah, for the whole life. Too bad. All right, let's go back to our example from last week. Mr. A started out his own company, still remember, and Mr. A transferred $10,000 cash from his personal account to the corporate banking account. We all learned that, assuming, okay, if I not said it, assuming your position is the accounting people for this company, not for Mr. A, okay. If I want to say Mr. A, I will mention it, but assuming your job position is the accounting for corporate. So right now, when your company receive $10,000 cash, how did you enter into your T account?
WSS and then
So let me put it this way. Which account you want to pick?
SS and equity.
Can you narrow down which assets? Yes, let's narrow down. Yeah, we know it's assets, but which account under the assets?
Cash.
Cash account. Everybody agree, right? Because there's cash, right? Transaction. So we want to pick cash account under the assets. Another account? You mean you mentioned equity already, but let's narrow down.
Shareholder capital.
Shareholder capital, or you can say capital pay in,
Yeah.
right? Either way is right. Everybody agree? So right now we pick out two accounts. Remember, for each transaction, there must be at least two accounts, sometimes three, but cannot be only one account. That's called duality, right? Duality. All right. So we have cash account, we have equity account, right? So we know cash account is equity account. So when we receive 10,000 cash, that's increase. So that will be on the left side, or we can say on the debit side. Everybody follow me so far? Because this is more like a review. And the equity account, or say capital account, the increase is on the right side or credit side. Everybody agree? Right. So let's start. Okay. We're gonna repeat this kind of example practice over and over again. So making sure you can handle it. Okay. So for this transaction, we have cash, we have capital, so in the future, I will not mention debit credit again, okay? I will not redo it again, okay? Debit always on the left, credit is always on the right. I will not repeat again. So here, cash, we know is assets increase on the debit side. So this is the way to do it. And the equity increase is on the credit side. All right? Okay, on the second day, we say this corporation ordered the materials, that's the inventory, okay? Order inventory from the supplier and deliver it. The value, the cost is $3,000 and payable in 30 days. Let me repeat this transaction, okay? On a certain day, this corporation order materials. The cost is $3,000. We just simplify everything, okay? In real life, it could be very, very complicated. We just try to simplify, just give you the sense. When this company ordered $3,000 in materials with the inventory number 1, okay, and deliver. However, there's no payment. Payment is like 30 days payment. So you are the accounting. What kind of account you want to pick for this transaction? It's also on the assets, but what narrowed down? What's the name of the assets?
Supplies or inventory?
Inventory number 1, right? We just give it a name. Inventory. Number 1. So $3,000 you want to enter on which side? Increase, right? Again, it's increase. But there's no payment yet, right? Not yet. No cash payment yet. The payment is due within 30 days. So you want to pick up which account? Liability, can we narrow down it? Account payable. Don't just say payable because so many payable. You can say account payable. All right, account payable. Account payable liability increase is on credit side. Right. Account payable. So you can see on each transaction, at least you can double check. Number 1, whether or not the total number is correct. The total number must be correct. And number 2, whether or not they are on the opposite side. Right. At least this is minimum double check. Right? So yeah, go ahead.
Does that including the freight and insurance and tax?
Okay. He just mentioned when we talk about this $3,000, does this amount including the freight, the shipping, the insurance, the handling, whatsoever? Okay, that is very complicated questions eventually. This is $1 million questions, okay? Because that kind of issue belong to the cost accounting. We will not mention cost accounting. Cost accounting, at least in my opinion, is the most complicated topic for the accounting study. It's very, very complicated. We don't have time to discuss. But the simple answer for your question is yes. Yes. All right. As I said, we just try to simplify everything here. But in real life, it's a lot more complicated. This $3,000 will include shipping, insurance, labor handling, whatsoever. All right. So it's not easy. But we will not touch that. So far so good, right? How about by the time your company pay off $3,000, say after 30 days, your company just follow out the agreement, fulfill the agreement, you pay out $3,000 to your supplier, to your vendor. So by this time, how would you do?
Credit the cash.
So this started. Which account you want to pick? You have cash payment, so you want to pick cash for sure. How about the other account? The other account you want to pick?
Account payable.
Account payable, right? Account payable because you use cash to pay off your liability. So there's no problem, right? So by the time your company, oh by the way, assuming right now everybody use software, okay? When you use software, you don't see T account. You just see entry. You just see the space and entry, and by the end of the period, it will make out the statement for you. Not necessarily T account. T account is a very traditional way to do it. It's only the concept, but I will not misleading you. In the real life, people don't use T account anymore. Okay. So by the time your company pay, so no problem, right? When your company pay 3,000, it is on the credit side, right? Any questions so far? Should be right? Decrease, right? Your cash reduced by $3,000, and then you account payable also reduce, right? So reduce is on. So far so good. So far so good.
Yeah, in the liability category, there is a tax payable. It's not something to do with inventory.
Not yet. Okay, not yet. He just mentioned tax payable under the liability. All right. Again, tax payable is also very complicated area. So many taxes. If we only mention tax, usually we mean income tax. Usually, but for corporation, let's have a brainstorm. Can everybody give us idea? As a business, when we talk about tax, other than income tax, what else?
Employee,
Say again.
employee.
Employment tax, that's big headache. Payroll tax, this big thing.